What's up, you guys? This is Corazon from Corazon Akinyi, and today we're going to talk about how we ended up paying over $131,000 in my student loan debt. The first thing that you're probably wondering is how the heck I got myself into $131,000 of student loan debt in the first place. I do have 2 degrees. I have an undergraduate degree and a master's degree from a private school. So not the smartest thing I've ever done in my life. And on top of that, I accrued over 10 years of interest on my student loans. I will say the first step that we had to take in order to get to this place that we are today, student loan debt free, is facing the student loan debt head on. That's because, one, I was actually enrolled in the student loan forgiveness program. At the time, I was working at a nonprofit organization, so that qualified me for being in the program. And it was at that time that news was being reported that less than 5% of people actually got approved for the student loan forgiveness program. And it was at that time that a light bulb hit. Not only light bulb, I just started to get really anxious about the amount of debt I owed and was feeling like boggled down by it, and it really weighed heavy on me. I knew it was time to do something about it. I just wasn't sure what to do about it or how I wanted to proceed with it. So the first step was actually just facing it. I had this debt and I needed to figure out a way to get it paid off. And so these were the early discussions with my husband about how we were going to pay this vast amount of student loans off. And so that led us to creating a plan. And within that plan, the next thing we ended up doing was assessing our actual capacity to pay the debt off. That means we had to organize our finances. We had to write down our list of expenses. We had to write down our total debt. We had to organize our bills. Luckily we were actually in the early process right before we were getting married. So it actually came in great timing because we were able to organize our finances together before we ended up getting married. And so that's exactly what we did. We organized our finances. We looked at our expenses and compared that to our income. As a result of that, we were able to see the balance and what we would have left over after we paid our bills, after we spent money on our expenses, and then we were able to put a number and allocate a specific number towards our financial goals, whether that was saving, whether that was paying down debt, whether that was extracurricular activities that we wanted to spend our money on. So that's really the first step that we took, was figuring out how much we could put towards our overall debt. I think the problem is that a lot of people actually believe that they don't have a choice and don't believe that they could ever get out of debt or save a specific amount of money. And unfortunately, they don't even try to see what their true capacity is. And so until you sit down and review your expenses and review your income and create a budget, you sometimes aren't able to really see the full view of where you are and where you could end up being. So I think that was the very important first step for us in managing our finances, and then therefore helping us to manage our debt. The next thing that we did was create a budget. We created what I would consider to be a transformational budget. And that means it was transformational for us because it helped us to reach our goals. It was very specific into not only what we wanted to attain and inclusive of those things, but it also fit our lifestyle. So a lot of people create a budget that is just very standard. Somebody told them to create a budget, so they did, and then they don't stick to it. One of the main reasons people don't stick to a budget is because it doesn't fit their lifestyle. So we allowed ourselves to have the things that we value and enjoyed as along the way of paying off debt, along the way of saving money, along the way of investing. And that really helped us to stay on track. But the first step was to, after assessing our finances and our financial situation, was to create a budget that we then had to commit to sticking to, just like we had to commit to paying this debt off. And once we got started, we then used our smaller debts to build momentum up into this larger debt. So the first debt we actually worked towards was my husband's car payment, and we were contributing around $600 towards that specific debt. Once we paid that off, we rolled that $600 into his student loan payment and added the minimum payment that he was already making to that. And then once that was paid off, we then used that amount in payment to pay off my student loans. And that was really helpful and beneficial in a lot of ways. It helped us to stay motivated in the process, to see and tested the waters as to what it is that we could do in the first place. And it also helped build our confidence towards reaching our goals. You know, once we hit the first goal, we felt really confident and good about that. It also allowed us to make and celebrate small wins before we got to the bigger and larger ones as they came. So that was really helpful in our overall process. And that method is the debt snowball method. The next thing that really helped us along the way on our journey is using systems that helped us stay in check. One of my favorite overall systems is the cash envelope system. I love that system. And if you don't know what that is, that entails getting cash out. Creating a budget, getting cash out in the amount of that budget item for whichever category you need help being in check on. So for me, that's anything from like personal expenses to eating out to travel. So you take that out of the bank account and then you utilize that specific budgeted amount till it's gone. This is a great visual strategy. A lot of what happens is when you're swiping your card, often you don't realize how much you're swiping or how over budget you are. So this strategy really helped me specifically stay in check so that I wasn't overspending in areas that I shouldn't be. So that is definitely one of my favorite strategies for saving and for staying in budget. The next thing that we also used often was sinking funds. So sinking funds are really great for expected large future expenses. So this can be anything from holiday expenses to travel expenses. So instead of making big purchases at one time, you work your way towards the larger expense. So for example, if you know you want to spend $1,200 during Christmas, you can break that up with $100 payments for up to 12 months to use for that overall $1,200 expense. And so we did that for larger items that we knew we needed down the road. And this really helps so that you don't get off track, you don't overspend, and so that you aren't thrown off by larger irregular expected expenses. The next thing that really helped us to really achieve our goal was being incredibly intentional about increasing our income. We knew that we would be able to reach our goal, but we actually had planned to reach this particular goal within a 4-year time period. And so increasing our income actually helped us to fast track it at a faster pace. And that meant being very aggressive about promotional opportunities within our current work circumstances. It also meant aggressively looking outside of our current employers to see what other opportunities were out there. It meant negotiating our salaries to make sure that we were equitably paid. We were very, very intentional about our pay increases and about making sure that we were adequately paid. And this really helped us to increase the payments that we were able to make towards our student loan debt payment and our overall personal finance goals. Another way we increased our income was through investing. We actually ended up investing really early on into our marriage into a few rental properties, and this actually attributed to $20,000 of the student loan payment. Last but not least, one of the biggest contributing factors to paying off our debt quickly was maintaining our lifestyle. Although we had income increases, we never switched up our lifestyle habits. We maintained the same lifestyle habit for probably the last 5 years of our lives, regardless of the fact that we had multiple promotional opportunities. We never switched it up for the most part. And actually, as a matter of fact, it felt like things actually got less expensive because we also, because of being married, consolidated a lot of our expenses. So we actually were saving some money at the end of the day. So this really was key in making sure that we actually met our goals, because we weren't living beyond our means and we were actually living way below them, which really helped contribute to our overall goals. And one thing I'll say is that it is very hard to go from high to low, right? So making sure that you are steadily increasing your capacity as you are increasing your actual income is very important. You don't have to just jump from A to Z. You can creep, and I mean creep, slowly. You can adjust your lifestyle slowly as you see fit. And I think this is major key because once you get comfortable with a specific lifestyle, it is very hard to come down from that. And I speak that from experience. So just maintaining where we kind of were was really helpful in the first place so that we didn't feel any obligation or any pressure, or we had a high level of crazy standard to begin with to where we felt like we had to Jones it up in the first place. So that was really beneficial to helping us achieve our overall goals. So I hope you found this information helpful. I have some resources down below for you to check out. Please subscribe, leave your comments. If you have any questions, please leave them there and I will make sure to get to them. Thanks.